So this is your classic no-nonsense algorithm of some manner or sort, and if you're really going to have a set of rules, that's pretty simple. If it's blue, it's in a downtrend. If it's green, it's in an uptrend. And you're only concerned about the last actually bar. But here I'm gonna go back 10 bars or 8 bars so, and I'm forcing that to happen just by only viewing where we're at right now. And I have the 50 pip grid there, so we know exactly how tight a stop we need to run and how tight of a limit. If we want to put sell limits in the blue cloud to get picked up on spikes where the market spikes up, but we know that we want to be a seller because we're basically any kind of stop hunts that take place that are taking out the fragile bears with their tight stops. We're gonna take that, and it's because this is a daily chart and this is end of day trading here, and you're gonna use a 50 pip stop. Obviously, you need to have a 50 pip limit grid in there to capture the spikes that are going to happen. So at the end of the day, you could say, oh, on the blue thing, I'm going to put in sells. Now, the point at which it becomes a problem is, I got duplicate charts here. I just realized. Let me get rid of this one. Another thing, you can see duplicate charts this way. What you're doing is you're just saying, I want to see, I had to hide some of the symbols here because I want to show the guppy, how vicious the guppy can get. And if you're using this radar love setup, where you're just going to literally treat it like a robot, you're going to say, give me 50 pips grid here. That's a lot of pips, and I should have been a buyer here. So my system is counter entry. I'm going to get in a green cloud, an uptrend. I'm going to buy the pullback. So every day it's down into the cloud. Now here I may wait for it to come back deep into the cloud. But the problem is when the market heats up in a way that doesn't fit my 4-period moving average cloud, histogram moving average, I'm going to get obliterated. Because I can't see why this is happening. Because I'm only looking at the last, if I'm just going to be a crude indicator radar seeker, I have a scan, it's running every day. I look, okay, there's a sell, there's a buy. If I sold the very faint counter trend moves into the cloud, I'll probably make money. And the ones that are extreme, that's when your sell limit bank in your so-called 4-period moving average trend, it doesn't matter what it is as long as that your orders bank fits that currency pair. So you could trade this in that manner. Also, you could trade at the market here at the end of the day. So at the end of the day, you have a decision to make. The cloud's green. What do? You just keep hitting the buy button every day. It's down into the bullish cloud. You counter, enter the cloud. You are buying on pullbacks. It doesn't have to be 618. Why would you deny yourself a perfectly good trend trade? And obviously, on here, you can see the best is the CAD yen. The CAD yen is the perfectly behaving currency pair that fits my cloud so perfectly right now. It may not go on forever. So what I did was before the market closed, I threw the limit orders in an array above. Because I know there's sellers up there. I don't need to wait for a pin bar. The pin bar is the winning strategy on a limit grid. But in the meantime, I could be a goober. I could just, here's a little topic about it. Now, I want to stretch this out and go like this and go, this is a lot of pips. So here, if you were to look, but I'm just saying, compare currencies. If I scroll through the guppy, look at this thing. Like, look how, if you were just to literally coming at that, okay, what's the trading decision? That's how you would backtest that. Okay, here's a beautiful sell. A baby rally into blue in context would not matter. You would be, that's why people want to trend trade. That baby rally. You sell that. There ain't no 618 pullback. That's a doji. That is on the daily chart. That's pure indecision, or it's pure agreement. I was talking to this guy about the term unfair value. So fair value is the doji. Like right here, it's fair. People are like, okay, I agree. Oh, bump it up a little bit more. They keep bidding it up. It's an auction, right? Oh, a little bit more. Oh, a little bit more. Now this is at the same time this dollar CAD. The CAD yen is drifting up. Beautiful pullbacks, baby pullback. Buy a little bit more. You're only making like 25 pips on that trade. But it's a perfect fit, right? It's just drifting up. We don't know. It's probably going into some. Now, as soon as you do this, okay, now you're like, whoa. So this, all of a sudden you see this, you go, oh, well, shit. When it hits here, it'll probably scream like a rape date. Yeah, because, dude, it's never been there in so long. It's going to be psycho. And look at this little creeping towards the border. Now the trend traders are going to claim, dude, we were buying that whole time when it ripped up there. But see, there's somebody on the other side of that trade that's going to sell that whole 100 pip zone. And when it comes sucking back 50 pips off the 100 pip zone, imagine that you sold at the top of this, so you sell more at the top. This is limit. I'm going to limit strategy now. We can see what the trend traders are thinking here, obviously. According to their algorithm, every time it rallies in the blue, they sell. When it rallies just a little bit, they sell more. But here you'd say, well, I got stop hunted. This is why you need to have your sell limit grid trailing behind you to pick up any type of attempts to deny the cloud. But see here, on this one, if you had buy limits here, because you're like, well, I bought one at the market, but we could still pull back, and you would have got picked up here. And here's where if you're by rule, this is a daily chart. You're really waiting to sell into the blue cloud. So here a little bit early, maybe, because there's no other sell here. Like here's a little bit of a thing. If you took a religious view of your indicator and you sold that little baby rally in the blue cloud, you're going to have to do a little bit more thinking than that, and accept the fact that this box here is important. Right? That's the fact that it fell in and it took out that low. That's something that I don't think that goes unnoticed by the market. Can see itself, right? As the market looks back, it goes, well, see, we haven't been down here. Let's go down there, right? Let's go down there. It's not that they're hunting the guys that are running money management. So the guy that bought down here in this luscious, deep discount area, right? So as right here, once again, we see the same situation. This lonely wick is the floor. Even though we rip above it, we come back here. We dilly-dally. Now this is where huge accumulation takes place, is underneath this, right? And sellers come in here again. It develops its own trading range here in a 100 pip zone. The guy that's trading that is maybe not the guy that's cloud trading, because you can see he's getting his ass kicked, because every time he sells, and then his sell limit's like overfill. He should be selling, and it is a good trade. And he is going counter trend entry. That's my system also does that. Every day it's up in the blue, you'd sell. So you'd sell here, but if you didn't take profits on that, you're fucked. You're not going to sell this. This is no nonsense is doing. It's complete nonsense. He's literally buying this. He's buying here. It's not total nonsense, but you can see how if you buy here and you're like, whoa, here we go, oh geez, if you're buying the mini pullback into the cloud, plus you have a top becoming a bottom on the 25s, and the market goes all drifty. Here's a perfect trend. Oh, pull back, we got a top become a bottom in the cloud, we got a few limits in case, and we make 100 pips, right? That's the trend traders trade. But behind the scenes, in the evilness of banker manipulation, they're just trying to take it up and break it out here and trap all those bulls that think it's going to go to the moon. Yeah, that's what it is. Okay, no nonsense. He figured it out. Yeah, what it is it's like It's like the Democrats interviewing Zuckerberg. You want to fucking laugh? You want free fucking humor like Facebook, free stuff? Um, Also, this hole to me kind of is something that's kind of fueling this rally. Here's the trap down here. So there's a fractally speaking, somebody's talking about fractals, like here's a monster Williams fractal. Here's a baby every time the market does a turn. But notice here, the turn comes in price, and then later on, they wick it. And that's a different kind of low. So these are vacuum fill lows. Like the market just sweeps that out, crushes, comes back to the floor. The scalpers take advantage of that pretty heavily. And of course, that's the high probability exit. Anytime you dip below the floor, the first scalp is into it, right? So just find a bottom. Now here, they're crushing you. But if you didn't realize this was here, then you got a problem. Also, there was this big hole up here. Everybody was eager to watch this fill beyond here, but it never made it. So the fact that it's not happening, plus this is literally 1 month of nothing. This is where people are losing their minds. Because look how many pips you made here. You made how many pips? And even the sell into the cloud, this is the most... Another thing is, if it is up, like I've said before, if it's up 150 pips on the day, you're selling that with a wider stop. Every time it's down big, buy. It's up, don't buy. Even though you'd be right, I'm not buying that. I'm buying here and I'm going to hold it. And maybe I'm selling into that, but if I'm not what's fueling that move? This big hole here, right? This hole, we only partial fill, and then later on. So the drift here, another painful experience for people that are long here. And my cloud is very tight for a period, so I'm not going to get trapped. I'm going to get trapped. I'll get sell here maybe, pushing my indicators over the edge. So it's a 4-period moving average with a 50 pip grid. That's the whole fucking algorithm. It's how you trade it. Certainly I can see the trend trades here. Here is the beginning glimmer. We have our first switched on. This guy was showing me a system and I was going to die because it was like, well, here's a signal bar. Well, here's a signal bar. When it's green, buy. When it's blue, sell. The only problem is, you can see the problem. This is 300 pips of blue. Here's the first blue. I'm in sell mode. But if I got stopped out here, and do I have targets streamed down to here? This is going to be insane if they ever hit that. And you look at the bounce you got out of that. If you look on this 50 pip grid in this 50 pip window, the first time we tag it is here. Look at that. Somebody made 100 pips on that. See how that works? This slot on the 50. So get a 50 pip grid. You need a grid. You need something to base your stops on. The ATR is a silly notion. What's going on right now is all that matters. This thing's going to pop up so hard. I'm selling into it on limits. I know that. I know that I'm going to the Doral for my currency meeting. So, it's okay. And I can also put in the buy limits if we get vicious, but we're not going to get that vicious. How many times do you see a move like this? And don't forget, somebody bought that. Or how about 28 people bought that in different ways with the really wide stops? Imagine a 1,000 pip stop. You could have traded this. So it's $100 risk per trigger pull to make $100. Or you're going to try to one ticket. Another thing is, if you're going to scalp, it's a completely different world. You're trying to make 5 pips there. Now the spread's your enemy. But here, there is no enemy of spread. If you're going to put in and buy and let's just imagine this trade for just to prove that auction trading is real in the markets. The guy that said auction has no business in the market is the guy that lives by indicators. He's the guy that would say, weird sounds out of your engine doesn't matter. Whatever's on my dashboard, if it's not on my idiot light board, then therefore I'm going to ignore it. that is what you're saying. I don't need to know what a car is built on, how it works, that a piston rod could come through my skull. But modern cars aren't that, race car, right? The engine comes off on the dragway and goes into the crowd. That's always bad. So, it's safe. I figure this is not risky at all. This is just money. If you're worried about risking money, then, just try the demo until you trust your algorithm. But at some point, you can't just live off of, if there's no trades happening that week, how are you going to pay the rent? How are these people in this no-nonsense thing? I guess it's a hobby, but it's a trend hobby on a daily. But, it's not to say you couldn't get in super heavy, and they should get in heavy with multiple tickets, but they're not doing that either, I can see. They're going, no, I'm here to stop. I'm going to take partial profits. No, you got to get on 100K and take off 10K at a time and get the fuck out of that thing and be up on the trade and have it drift. This is the scalp drift method. You scalp the psycho wick, you ride the swing. That's all you can do. That's the maximum efficiency of any system, is to do what it's saying. Now here, going back to the chart, do I really have to? I just want to ask anybody, do I really have to babysit these markets if I have wide stops? No, because I could sell every 50 pips. I sell this. I'd sell just beyond the line here. So I'm going to sell right there. I'm going to sell this 50. Now, how many tickets are I'm committed all the way down. I have 1,000 pips stop, don't forget. There's no way they can't stop hunt me, dude. We're not going down 1,000 pips. So it's kind of like trading without a stop in a way. I realized that when I wrote a script like that. I'm like, you know what? That's like trading without a stop, because it just blew up the account. There was not enough money for that trade. But here, remarkably, your first fill here, you see the 100 pip winner. You see them tag the 50 again, another 50 pip winner, and they don't quite get to this 50 yard line, but they do later on here, and this is a beautiful winner. You actually, it closed under the floor. This is another thing. Once it closes and gets locked under the floor, you've just locked in a bullish winning scalp. That is the supposed outcome of that trade. That strategy is based on, we close underneath this thing, we buy that. This in time, the one moving average, which is frame by frame, this bottom, it becomes a top only for a little bit, and then you're off to the races. Sure, you could do this on the 15-minute chart, but you better have your finger on the trigger with a 13 pip stop with an 8. I'm telling you. How are these people doing this with one ticket? Sure, if this is a 15, and this is 50 pips, wouldn't it be beautiful? You're like, oh, I bought that. You're waiting for the pullback. You're going to go against, if it's down, you buy into the moving average. And you could have I like the histogram because I can count the bars. I don't have to see another line. So I have it's actually a 2, 3, 4 period moving average. So there's like a couple of clouds in there. When it goes deep blue, you know that, or you should have a view here that's severe and that is severe. That is severe. It's like a parabolic SAR kind of, but this is like, whoa, shit. How long is that going to keep going? That's also using the trend system to say that's just overheated. I mean, it's ridiculous. It's unfair value. So I'm running this with the things down here because I seen somebody do it, and they thought they were fucking it up, but honestly, you're not, because when you're running vertical like this, which I am, to show what would you do with the trade coming at you right now without regard to structure, and is there structure trades you could do that you don't feel like you're led by the chain by your indicator, that you're a slave to your indicator because I'll just do what it says. Yeah, you could, but you have to be aware of these pockets that could fill and totally destroy, or you're you're taking that based on the trend, and you also have, this is a setup right here where you can see that this will probably be a vicious rally into this zone for the CAD yen. Yeah, the yen's just getting annihilated, you know. I mean, this goes, you know, people with negative interest rates and stuff like that, which is what you're saying is that I'm willing to pay. I don't see why people are so freaked out about negative interest rates. Like, nobody owes you anything. This entitlement shit is, you could throw up with other people. The inverted yield curve. Dude, you're lucky they'll let you have your money. Shut the fuck up. You know, how about the Cyprus raid? But that's just because of all the money there, right? Low taxes, 5%, that's right. All the money's there. It's a fucking shelter, for God's sakes. Yeah, they raided, of course. The fuck? It's just like they're going to subpoena you because you fucking, your car doesn't look quite right. They take you into court. We noticed your muffler's kind of fucked up. So, but honestly, if you're trying to make, you want to run a 100 pip stop, a 50 pip stop to make 200 pips, this is the ticket. Look at the grid. Say, can I do that trade? Even from a trend standpoint, I don't think you want to do things like smooth anything out more than I've done. This is as simple as it gets. I'm only putting the cloud on there so you can see what the trend traders are thinking. Some people want completely naked. Some people want some clothes on it. And if they don't see some clothes on it, they're like, is that even a human being? Like, they can't tell what sex it is, maybe, right? It depends, whether there's some guy that was trying to wear a dress or something to work. Just don't show up in a thong, dude. So, but how talented is the guy, right? If it's Weinstein, you're like, whatever. I'm gonna be in your movie, dude. I'm all yours. Bend me over the MT4. I'm ready for you. So, how much is money's involved? It's so funny how people, like, a certain amount of money, they're like, oh, really? Okay. Also, these, I got the $10 drops in here too at the bottom. And of course now, to have trade plans for this stuff, you can see here it would take you 2 months to get filled on this strategy here, where you buy this fresh, lonely low, which is psychotic. And you'd have your scalps, you'd bank those, but you do a rinse and repeat. And here's the problem, is that you're going to have to do that same trade plan where you're constantly running the 50 pip deeps every day. Maybe you put in 10K, 20 pips apart every day. You launch the script. It doesn't fill every day, but the day it fills, it rips, right? That is a random, like every day, just because you never know. Now here the problem is that you start doing that here, yeah, they're going to stop you out of that. But notice this is a 100 pip winner. So if you're just throwing the grid out there and you're not looking at this shelf and saying, well, what about this? That's fucking nuts. That's a high feeding zone and it's deep. It's way back. It's 2 months old. We never made it to here. And when we did, the scalpers were nipping that off there, but they're just getting killed. This thing is going, if it hits that line, and that's running out of hits. I think we cleared this for certain, and here was the confirmation, guys, on the 50-yard line. This is the breakout pullback to this point, so we've marked it. Here we can see the 50-yard line. Breakout. Here comes the scalpers. They make their 50 pips off that top in 1 day. High probability trade, and here comes the confirmation, guys. Okay, breakout, confirm. Let's buy where we would have bought at the 50 and ride it up. Here, let me just stretch this out. I was just trying to emphasize the fact how many pips that was. So here, the trade plan. You're going to buy for the next 50 pips, you're going to put in 10 pips apart a grid, and maybe you buy all the way to here, and maybe you buy more here, but they fill you here. You don't need to be there for that trade. No nonsense might even be selling here, right? Ooh, it's down. We're in a downtrend. Or maybe he thinks it's up, but if he thinks it's up, he's going to buy, say, confirmation entry. You know, he might buy here, and then he rides that. Oh, I get, and I don't even know, but it wouldn't matter, because what would really matter is if you bought here and here and here with a 10 pip stop, they're just going to crush your nuts, and then you're just never going to experience that. Also, you would see that this is actually a bullish signal here, because you had the green cloud. So what you should have been doing there is not doing the, certainly not buying on an up day. I'm always selling up days and buying down days. We're going against the crowd. So I would be selling here in a sense, but I wouldn't, because I'm not dumb enough to stand in front of this wick. Here's where you put your limits in and just walk away. You'd already have your limits here, right? This is like this. Any spiky moves, it's easier to show a 10-year-old this shit. See the big move? Big down? Yeah. Okay, that's the place you want to buy. You want to buy here, see? And you'd say, well, you bought there, it went down there. Yeah, what if your stop was 1,000 pips? You could have got out here, which people did. They're like, holy shit, I bought here. Oh, God. And when it got to there, they got the fuck out. All the hedge people did, because they're like, oh, you know what? Didn't lose on that trade. Yeah, it was kind of scary. We were down 150 pips. Came back. Loser became a winner. But what if you put in buy every 50 pips, every week, every month, the whole month? You could press a button. When we're here, you put when on this day you could put in your limit grid. Okay, you picked up a little bit. Here you put your limit grid. Okay, you picked up on the 50s. You rode it to here. All right, break even on the top, but you made money. You swung traded on limit grids all week long. You know, you got them in there all week. So 5 bars. It's big down day. So you buy one at the market. You can see people did that. Going, oh my God, look at this. You know, they have a weekly cloud. They're like, that's a pullback. The reason why buying there blindly, of course, you're going against your trend system too. So it's a conflict between, well, I thought you said buy if it's down. Yeah, if you explain it to somebody, they say, well, you just contradict yourself. What are you, fucking Democrat? So, thing is, this over here, when you sell into this cloud, you're going to tell me, dude, that was amazing. Like, I get my first blue bar as a baby rally, and just like you said, put a big ticket on a baby rally and sell and like make your 50 pips. This also presupposing you had a target for 50 pips there. So in my book, because it's a small down move, I would buy heavy with a tighter stop. Here, you'd have to buy, because it's such a big down move, you would buy with a stop, say here. And when it came to here, you'd have the choice to get out, or you bought big here with a stop down here that was twice the magnitude of that. This is another way to think about ATRs, so supposed ATRs as true range movements, is that if this just went down 150 pips or 200 pips in one day, you would buy here with a 400 pip stop. Because eventually that became a winner. Eventually it became a winner. That is a completely different strategy than buying in 50 pip grid, having 100 pip stop, and experiencing this slam back to the structure. So this structured trading would be like a placing orders there at the pivots. Also, at the end of the day, when you're smashing in the structure without regard to the cloud there, you could ignore that and just place that order based on that. Plus, you probably would notice that the deeper blue is that the vacuum's getting bigger and there's more chance for a backlash. So every time that vacuum gets too deep here, well, it cave into it here, and then this is where the robot would blow up, trading strict rules here because the robot's not going to notice this top become a bottom in a 50 pip window there of like, okay, we broke through. Where do the buyers come in? The confirmation buyers buy. This price matters still because everybody's looking to get in. They didn't get in here at the breakout. They want to buy that, and then it fails because we can't push it. Also, the scalpers that have 20 pip stops, they just feasted on that little window. So all these nooks and crannies are based on, if I put up a 100 pip grid, you'd say, wow, look at that. But I like 50 because you could run a 50 pip stop. You could see if you bought at the 50 with a 50 pip stop, you would have survived the entry, right? If you would have sold at the 50 with a 50 pip stop, just because it's up, because you're getting the best price at the moment. As far as you know it, that's the best available price. When it's down 100 pips, you can't step in with your market order that has a 50 pip stop. At the end of the day, if you're down here, you close down and you're only down 25 pips, and you maybe do realize where you're at in the grand scheme of looking back into the history of price, then certainly this is the ultimate optimal stop placement. It's not ultimate trade. It's not optimum trade entry. It's optimum stop placement that's appropriate for the move we just had. If the market drops down 25 pips and I'm running my stops at twice, okay, you want a number instead of 1.2x for metals? How about if the market's down 100, put a 200 pip stop in? First order event, first ticket you put on the board. Then place limits below that are 100 pips deep because we just went down 100 pips. So you're front running the market by 100 pips. You put a blanket of tickets in like that, see what happens. When that doesn't happen, you're going to realize you're out of your mind. We're not going down there. Market's quiet now. That party's over. That happened. That's done. That's what this is about. This sell-off here. Whoosh. Party's over for the bears. And now they're in the bull's den. The buyer's window. Right? Seller's window's here. Scalpers took it. Ride it up. And people selling into that right now, you better have, I think there's an explosion coming than that. Now here also, because it's so drifty, if you buy the pullbacks there, you can run a very tight stop. And if your limits may not even fill. But you're making money. According to trend trading, this is going up. You are up 100 pips. You're up 50 pips. You're making money. This is the reversal of all reversals here. And why is this? How could you have got involved in this trade? Fractally speaking, the microcosm in the macro, this here is the lonely wick. Don't forget that's 5 days ago. They dip into that 50 pip window, you buy that. Now, you probably didn't have your targets set for up here, but you should have, because this big void, and you can see by the big vapor trail, that's itching to be filled. How is that not itching to be filled? This steep decline, consolidate under the floor, rip, total engulf. Full tilt auction, runs out of sellers, runs out of buyers, you're done. So just like on eBay, you have an expiration on your auction. You're running auctions in here all week long. You're willing to buy below here, even though it's up here and everybody's raving about how bullish it is and how, ooh, I got in here on a no-nonsense entry and I'm just loving it and it's up and I got confirmation. It's just beautiful. It's the best trade I've ever been in. What about the strategy of saying, I'm so sorry to hear about your, it's like being in the funeral business. Oh, really? Somebody died? Oh, do they need a casket? Oh, well, mine are 20 grand. Why? What a ripoff. The bereaved is being ripped off. Dude, just get me a garbage can. I didn't even like these people. So, but, buying on the 50s, buying a 50K, right, every pip. People say, you're buying every pip? I'm buying a 50K. You just bought a 100K at one price. What are you kidding me? I could put a ratio on that and walk away and go, oh, yeah, I'm still in that trade. What was your risk-reward ratio? Oh, 10 to 1. Yeah, of course. But you got to ride that. And you could say, you know what? This thing is going after this. It's going after this. Sure, I could go flat there, and I would. I would go flat and go, you know what? I just made so much fucking money, and now you're not making money that fast anymore. You're locking up margin in this fucking winning trade. You just made 200 pips in 2 days, and then you're going to stick around for this bullshit? Not if you're a guy that trades that in golf and goes, I'm done. There's a seller's window. The scalper's going to have it. Yeah, I could buy lightly here, but I'm not going to get back in like I was. Here, I'm all in. I'm like, look at this place to get in. I'm getting in down here to get out into this hole, right? This hole's a different. So I'm using the cloud to show the vacuum left behind. Look at this vacuum left behind. Once it gets very deep, you're like, holy shit. And then they take it down one more time to the 50. You got a 50 pip stop? Making $200 on that? That's swing trading. In my opinion, that's swing trading. Auction, unfair value. Look at this thing in a 50 pip window. And you made how much on that if you held through this whole... Obviously, people are getting on this rooftop. Look at this. This is how big is this rooftop? It's like how many days? Yeah, they're selling in that. They're coming after this guy in the 50 pip. So if you have the 50 pip, you're trying to make 200 pips with a 50 pip stop. You're trying to make 100 pips. You're trying to make 50 pips with a 50 pip stop. All these guys are doing these break-even trades. Here's an easy trade plan. Buy 50 pips deep with a 50 pip stop with a 50 pip take profit, which means you're going to get out where the market is now. The market's going to rape down. It's going to rape up. That's the trade plan. What's your strategy? That's it. That's one of my strategies. There's no fucking way I can make a living from that trade. How many times, I guess you could, but if they crush you, and of course you can't run that in a screaming market. There's no fucking way you're going to stand in front of that volatility. Because even if the market comes down here like this, it comes crushing down here. Now it's just like insane. People are making money from insanity here. The trend traders are not making money if they're running tight stops. They're like, I took a sell, I got stopped. I sold here again, I got stopped out. But look at this shit. You're just buying every 20 pips for a move like that? So that's what I'm going to be doing with this account. I'm going to write scripts like that. I'm just going to run it. I'm just going to do harebrained shit like that. Different currency pair. There's no first in, first out. Just trade 28 pairs. Like, you almost have to. Maybe that's why No Nonsense is doing 28 pairs, because he's a prop guy in the United States, not allowed to do anything fancy. Keep you down on the farm here. So yeah, 28 pairs. Right? How many times are you going to get filled on my grids? And I'd have to have a grid that was written for, or I'd hand place the orders probably. Obviously, I would have a little bit more. On 28 pairs like this, I'd be like, oh yeah, that's going up. Next pair. And of course, here it's easy, right? You just go to the next thing. You go, there's nothing here. Move on. Nothing to see here, people. Go Australia. Now this is without the cloud. I can still see the trades, but it's different. And this is, I think, a 25 pip grid here. So Here, let me throw a 100 pip grid up here just to show you the difference. And then we can just save that template. Let me go to the indicators, not used to this format, this being down here, but I should have the 100 pip grid in here. It's actually big bars, so you have to believe me that it's 100. Don't say it. Here it is, 100 grid. Of course, we got to delete the grid we got, but this is the painstaking part of the system. That 25 pip grid on there. So 100 now. So now here's you're trading with 200 pip stops without a cloud, but here you're just going to trade pivot style. Or you're just going to say, you know what, this is 100 pips from here to here. I'm going to sell that 100 pip window. I'm going to sell $2 million of currency there. I'm going to lay in a bank there, hit a button, it streams the orders in. Of course, you do it on this day, say, or you do it every day. Every day you're selling 100 pips north. But you can't just... So you can't ignore this part of the chart. I think this is where people want to have a clean rule. What comes to mind here for me is the lower high idea. You have this high, and there's a lower high and a lower high, and then a little bit of a trap here for the bulls. But this is the first place that a confirmation. Also, it's a small bar. The volatility's died down. They're buying that, and they're getting picked up in that move just by pure gooberness and kind of turtle trading entry strategy. Just putting buy stops there, and if it goes up, they're going up. Sell stops. If it's going down, it's going down, and not so much fill there, and you're just getting... you can see the trade plan is pretty simple here. There's no cloud to worry about. There's nothing to say, oh, but wait a minute. Wait, just step aside, buddy. Have you seen the blue cloud that I just seen? How many good trades? The trend trades were, yeah, but that's a whole... I would reserve that to market orders, because those are end-of-the-day orders that you make a decision on that cloud. But this kind of trading here that I'm talking about here is where the big money's at ratio-wise, because when they take it down to that new low just by about 10 pip, 50 pips, 100 pip window here, to make 300 pips, you're going to accumulate in a painful... It may be painful for some people, but not if you've ever done it, because if you just put 1Ks in, how underwater are you if you start buying new lows in a fresh pocket? Here, if you were to buy... Somebody has a stop in the market that's getting stopped out. Would you like to buy their stop? That's the question. Do you want to take the refuge of this other guy's trade? He got obliterated, but you're going to go, you know what? That's a good price for me. For you, you thought, well, if it goes there, it's going to hell, and I don't want to be involved. And he didn't survive the insanity. So let's just do this in the crudest sense, that if you bought here a 1K at the 100-yard line, here's a nice simple trade plan for swing traders that don't want to have to babysit the market. They want to make $10 a trade. To risk $10 a trade, you're going to put a buy limit here, and you're going to say, okay, I'm sorry, buy limit at the 100-yard line. The other thing No Nonsense says that it's not true is that if you have a trade plan for the 100-yard line, you can make money from it, but it is structure-based. It's not, I mean, you're really going to say, where's the hole? Is there a 100-pip handle down there I could buy at? So you buy here at the 100, and they stop you out, maybe. They took it down another 100. I'm sorry. At the end of the day, you bought with a 100-pip stop. No, this is very important. You're going against everybody else on these trades. You're buying here with a 100-pip stop. Because it's underneath here at the market. So there's a qualifier there that's visually important to see this whole. Also, because it is down so far, velocity wise, here you're down about 100 pips a day there. You keep going down, and then there's another 50 pips left on the table there. This is why I don't think you can ignore this fact of this low here is important, and this low here. When you fall into this 100 pip window here, there's a lot of liquidity or stops for the bulls that are along this train, so to speak. Also, it's old prices, so they're fresh to the market. You're going back into this thing here. Of course, I would be buying very heavily here, but we never got filled in that 100 pip window, so I have to accept this one is the kind of the deepest discount. This is not as this is too recent, and we're crushing into that. Of course, if you had the 200 pip stop trade plan, risking $20 a ticket to make $40 a ticket, you would have bought that 100 pips, 100 pip handles. So you're going to need to trade this. This is pound Australia. You're going to need a 200 pip stop to make 400 pips. Then you could do it. Right now, you can see the trade plan. The market's telling you what trade plan to use because you never survive. It sells off here. In other words, if you buy at this handle, because it's 100 pips below here, or you're willing to buy that whole range for 200 pips, you're going to need to have the you got stopped out of this first ticket, but the rest of that rack survived it because your stops were running like this. This had a 200 pips stop on it. You can see here that's two lines, 200 pips. If you bought, now I'm not talking about buying necessarily every. You're still going to have to risk $100 on this trade. So it may be $10. It may be $10 stops. Or $20 stops. So you risk $200 in the trade. It might be $20 stops, but you're going to buy, and they stop you out of one ticket. But you can see this. When this is going down, you can still see this, hopefully. And now it does matter how far back you're looking, because in this, if this was a 15-minute chart, even though once they get to here, obviously the sellers come in like mad. In a 100 pip window, if you're willing to sell a 100 pip window to make 300 pips, the window's based on this high. This is why it's pulling back. Why is it pulling back after it takes out this for 100 pips and screams into this window? Why does it pull back 500 pips? Why? Doesn't anybody want to know why? When it's stacking up, the money management guys have sell stops stacking up to protect their trade, and it just climaxes. There's so many sellers on these tops in this hole, and it rips back, and now it's coming after these. It's a dual insanity. Going, gone. The auction's over. We've taken out these bears stops. Don't forget there's people short this train going, well, I'm putting mine on the Williams fractals. And think about the Williams fractal guy. I'm gonna buy a break out of this. We're going up here one day. Then they trap him, and he's like, holy shit, I'm down 300 pips on that. Stick with the winner. You know, you got your stop down here. You're risking. That's 500 pips stop. So, yeah, you can trade fundamentals. This Ryan Brown was talking about fundamentals. Dude, if you think that even matters, and that's why you're making money, you're only making money. If you got a 500 pip stop, you can make 300 pips. If you can handle $50 to make 30, high probability trade. Very high probability, right? But it's like watching paint dry. Who's going to watch that fucking trade? Here, this is a daily chart, okay? Now, I'm sure I can see no-nonsense trades in here. It's like, oh, we just got a nice here. We just got a signal to go along. We're up. My moving averages have turned up. I'm taking this trade here. Yeah, you're the goober. The market maker's like, oh, we got orders down here to buy. Yeah, we're buying at that 100 down there. Ooh, big trap zone down there. We're going to load up. Oh, retail guys are buying here in the breakout. We're going to trick them. This is what No Nonsense thinks about the bankers. Oh, they're going to let you have a little bit of a win, but then they're going to rape you in the back room. Oh, they'll let you think it's going up, but then wah, wah, wah. And then a little bit of hope. Oh, buy. Oh, but I'm buying into this floor here. Oh, well, that could be a problem. That's okay for the scalp. That's a good scalp. We all know this trick. You buy. There was a guy doing a video on this. Yeah, I won't reveal the secret. I will. You buy that. The scalp, it's over. Here comes the trend traders, and don't think that that isn't on their mind, this whole. Every market looks the same. Same story. But where's the fractal? The fractal is a smaller version of that. How about this cute little raid? Wow. How's that ratio? 100 pips stops to make how much? Look at this one. They're all over the place. Here you got this wedge. What could possibly go wrong? So the wedge is just identifying the voids that are forming. Here you got a void forming here, and this one is not really forming that much. This is a bigger void on the upside. So if you look at this, this is a deeper. If you square it off at the 100, you've only got a 100 pip void here. You got a void to fill of 200 pips. Okay, that's a 200 pip vacuum. Somebody's asking me about vacuums. They're like, I don't get the vacuum idea. Well, here's a 200 pip vacuum. We haven't been up here, and it only fills 100 pips of the vac. Here's a 200 pip vacuum, but look at this vacuum. How many pips is that? And who sold up here? People that sell at the hundreds to scalp the kickback to this support where we're at right now. That is the scalp trade. You could have laid that trade in. Here's the sad fact of trading. On limits, you could have put those limits here 3 months ago. A scalp bank. Imagine scalping on limits. Yes, that is the trade because your exit is known. It's right here. This happens all the time. Once you go into this vacuum, right, anything above here is no man's land. When you step above this no man's land, that's the trick. I could have put sell banks in here when we were here. If we ever come back to here, I know there's sellers galore. You can see the future. You know there's buyers galore here. Buyers galore. You put your limits in here. In fact, how about this? For the whole month, just buy every 100 pips down. You're not going to blow up the account. You're never going to fill down here. Then you realize, what am I doing? But here, it worked. Because the velocity of this market is so insane. Every 100 pips I bought, I'm just buying every 100 pips like they told me. And then this one, eventually, is worth 100 pips. 1,000 pips stop on all these tickets, risking $100 to make $100. Well, I'm actually I'm going to experience this bounce. Don't forget, when this limit fills, if it's got a 100 pip take profit, it's out. Then they come here. You're not filling this whole thing without taking something off the table because hopefully you got to take profit in there. If you bought with 100, if you bought at the 100 with a 150 pip stop, and you got filled here and here, cashing out of this one, you're stopped out of the next one, but you're going to buy here and here, and you're going to fill on those two, and these This one, you doubled your money. This one, you just kind of singled your money. But hopefully, you've got a view, and the trend trading systems are selling here on a small move. Right, that's the trade plan. In other words, I'm going through like 3 different criteria to enter because, structurally speaking, hopefully you can see this. Here you don't even get a rally back to there necessarily. You kind of just nick. It's wick to wick. I'm kind of doing closing prices, so it's blatant. But the people that are buying the 50 pip stop hunts, they're going to make 100 pips, and their ratios are pretty damn good. So that's a 50 pip window there, right? In that 100 pip window, there is that trade here. Somebody scalped that little pullback, and then we're off to the races. But fractally speaking, this is the microcosm of the macro. What's happened here? This is the floor. We smash off it, go below it, smash off it. Eventually, and the whole time this drama is going on, the whole time it's chopping around, it's forming this void it could cave into. It's cantilevered out too far. It's a branch off a tree that's stretched out too far. Here it's also stretched out too far. It's either going to cave into this hole, or it's going to clear out that wedge. So the triangle is a triangle, but it's what it left behind, that 200 pip window, and you crush that. You crush this window. It happens very fast because it needs to fill that so hard. There's so much pent-up demand or supply. That's what's causing this velocity run. And the trap just before that happens, people accumulate in fair value. So fair value is the middle of the road, this chop shit. And they dump into unfair when it's in the outskirts of town. Comes back to fair value, they buy. Or they sell, depending their strategy. Because you could have sold here, this is fair value kind of area. You're underneath here. Everything that's happened here, you've established a range. Now, fair value entries to unfair back, or you're going to go from edge to edge. Buy super low, sell super high, or what I'm kind of doing here when I buy this wick and I come back to the floor, it's unfair back to the last known fair, where here you could go from unfair value back to fair and get out. Unfair back to the middle, get out. You don't have to ride it edge to edge because it may not make it to the next edge. So you're buying unfair back to fair, middle of the road, get out. You made your 200 pips with a 100 pip stop. I'm just going to call out all the possible trade plans I can see here. And what's causing the trade plan is my stop. I can't put 10 pip stops in these trades I'm calling out on the daily charts. So accept the risk, all this talk about risk. What do you call risk? $20 or 10 cents? Or what is your, I don't get it. Now to me $100 a ticket's too much, because that means I got to be really right about my trade. What if I risk $10 per ticket, 100 pip stops? I'm in a swing trade. My trade plan dictates where I can use it. Here it is. Get a drop order going. A 1K in the United States, 28 pairs. Put up a naked chart. Look for a place to get in. Put a $10 stop to make $20. Walk away. Let it go. You're not going to watch 28 pairs on tick charts. I mean, you got 28 eyeballs. Your brain can't even process more than one thing at a time. Sadly, it doesn't matter how smart you are. You can only process one thing at a time. So, the trade plan dictates. So, my advice to, of course, I'm going away from the cloud here, but you got to ask yourself how much you want to add, how many trades you want to put on, and how much each trade going to cost. Maybe one trade costs $8, one trade costs $2, one trade costs $4. Now it's like, well, the question now is, obviously, well, which ones do I put where? I like the idea of saying, I'm risking $10 in each ticket. now I have the flexibility of saying I can trade with a 100 pip stop, or I can put a bigger ticket in with a tighter stop. So I created those single drops there for that purpose. And a linear risk, it's $1 risk. Okay, but I can't use, you go like, yeah, I got to use that. You got to use your tight stops on the 4-hour chart, right? Because the stop hunt on the 4-hour chart is only a 10 pip stop hunt. So you got to get your limits in those nooks and crannies. The nooks and crannies on the daily chart could be 200 to 300 pips. And it's not a nook anymore, right? It's the invasion of the whole dining room. So, I mean, this is not. But by the same token, we're going to buy here on limits, right? We're going to put limits at 100 pip grid. Just press a button. Walk away. Now, that's probably not going to make it to here in one day unless we get one of these psycho moves. But if you've ever seen that psycho move and gotten filled on that, and you're like, what the fuck just happened? I'm making money. I can't believe it. I put sell limits up here just in case it went higher. Just in case. I don't know where it's going. So another thing, people think they know where the market's going. So why aren't you? If you think it's going up, so here's the empowered trading torture. We're going to sell. We're going to buy down here, because it's going down there, and the market's here when they're talking about that. Well, then why don't you sell here? No, because my entry's based on a Gartley pattern like this. See, so criteria for entry is the thing. So that's the big deal. So, I'm sure at this point on the chart, there's some guy going, you know what? I'm getting divergence on my RSI there. We got a lower low. I see my RSI. It looks like this right now. It's I'm getting divergence there. Good entry. We're in an uptrend. I got a top, become a bottom here. This is revisiting the body of that doji. This is the 100 pip slot. This is definitely the trader's window. Man, this looks like a good trade, although it could tank, could tank. I'm going to put some limits in case I'm wrong, but I'm going to get in pretty heavy now. And I'm going to get in because you know why? It's down just a little bit. Here's the last of the trend traders. They're selling that little bit of, and something bad's going to happen because we spent too much time in a very quiet range. Something's going to go terribly wrong. When you see a triangle forming, the longer it forms, the more vicious the move. This is kind of a long flag. They call these flags, and it's actually for the people that were trying to start a trend channel trading system going there. They're a little disappointed. I sold here. It was, I was anticipating this as a bottom become a top. I sold here, but don't be blind to this because that's itching to be filled. So this was too. This was itching to be tagged. So was this whole thing. And buying that to make that with a stop here. Was that a good idea to scale into that? Some guy sent me an email. Scaling in like a pro. What's this professional shit? Dude, you're just scaling in. Well, I'm a professional guitarist. Professional means you're getting paid for it. Well, of course. So a trader that loses is an amateur trader. You're going to lose on some of these trades. Be honest. Don't lie to yourself. If you start buying from here down, and you're actually going to try to buy these, because this is where you're going to put a dense order pack, and your target's already pre-planned to here. Not because it's 100 pips, because from the floor, but it could just because it's 100 pips. Like two people can show up at the same train station for different reasons and both not get killed, okay? It's not like, what are they, mutually exclusive, whatever. But look at this nice shelf here in this 100 pip window. They tag it in that thing, and imagine selling there. Imagine selling because it was previous support. Imagine selling because your cloud turned down and it's railing into the cloud, and okay, I got a trend trade here. Sure, it's all available, but these people should be making money. These no-nonsense people have just been led by their own they built their own cage of filters in a way. Without a hard trade plan. There's no hard trade plan there. I'm risking 2% of my account. Why? The market's telling you, can't you see the fucking vacuum that you're about to crush in? Like, you can't, like, what? Or why are you putting such a tight stop? If it's 2% of your account's only so big, you're going to put a stop in because of the money in your account's dictating the stop? Or the ATR's dictating your stop? Not the market structure? What are you, nuts? Well, I'm just doing what my indicators tell me, you know. I built them like that. I get it that you built your own cage. I got it. So, all right. So here, it's trading the unknown too. And yeah, I'm going to put sell limits up here, and my target is going to be here. So I'll sweep up there for the limit trades. Now for the market orders, I just bought at the market there. Why? Because it's down and it's in an uptrend. Now it could go lower. I'm going to buy one at the market, put one on limit, walk away. You buy one at the market because you don't want to miss out. It could go up. You're getting a signal. But why do you think that is the best optimal trade entry? No. You got to scale in. I'm sorry. There's no fucking way that that's going to go like this. It might. What is the next price pulse? You must know or you wouldn't be buying. You're saying it's going to go like that and you're going to put a stop in here. But what if I come hunt your stop and then I take it up like I did here? No nonsense is buying here in confirmation. He puts his stop in here, I buy his stop and I make 100 pips. Then he goes long again because it's up. It's up, I got confirmation, it's up. Bullish candle. He puts his stop in, I take his stop and make 100 pips. Okay, goes on all day. Right. I beat no nonsense up all day on scalps. He's not revealing his trades because I guess he doesn't want people to make so much money fading him. Just pure gooberism. But people sell trading courses like that. Yeah, I got a moving average here, you buy and pull back. See, you buy here, it's pulling back. It pulled back 300 pips. I just blew up the account. What? You want me to do what next? I'm not doing that. We lost that last trade. I don't know how these people are doing it. Well, part of the mentorship program is we introduce you to painful situations, electrocution, cold water tubs. You ready to trade now? It's Forex boot camp. Forex boot camp. You feel like trading now? Oh, anything, just no more electrocution. Yeah, you feel like you're being electrocuted. You buy here. He said it was bullish. I'm in an uptrend. I keep buying every pullback. Fuck, it blew up the account. Great. Hopefully you're doing more than one trade in your life. Yeah, that's going to happen. That'll happen. I'm buying. It's pulling back. I'm buying. Okay, well, you know, the reason why you're crazy to keep buying this as it's dropping is unless you're going to scalp 25 pips. No. This means something. This abyss. This hole is important. Sure, you could scalp off of that, but dude, the sell strategies, the trend traders are making money here because they're just selling. So some strategies work and then they'd stop working. They go, you know what, that strategy worked. This is the oldest story about people building algos and these, trading models. It worked until it didn't. Yeah, and I can't imagine why, because could it have anything to do with I know your trench system nailed it here, and it nailed it here, but when you stepped in front of this shit, how'd it work out? Tell me about your trend strategy. Okay, well, we had a problem there. Did you now? Yeah, we back tested this kind of stuff here, And the thing about no nonsense, he's going back testing like, went back 10 years, this thing works. Okay. Dude. You're barely making money. You're barely making money. You cannot make a living with that system. These people are hobbyists. You're never going to make enough money. Well, maybe it's kibitz. It's just extra money. I mean, I don't even know. You're going to take some drawdowns. Okay, you might make money. You might be up 10% at the end of the year, but you're going to take a 50% drawdown. Now you're up 60%. You're up 10% at the end of the year. You got to be, these people got to be getting killed. If you go see the people in the trade call thing, some people are making money, but how long? How long is that algo going to hold up through the treachery of unknown future? And futures, right? When you trade futures, you can do a hedge between 2 months. You can be long February gold and short January gold, and you can be 5 years out. 5 years out, kind of brutal spreads, but I mean, you're doing a weird complex swap thing. There's that trade. But here I'm talking about just getting in spot prices in these things and going, okay, let's just get in this 8 hours, boom, 3 days, boom, you're out, it's over. It goes choppy. You can't come back in with your trend system. There ain't no trend now. It's gone. It's just like a mirage. It was there, it's gone. This trend here, look at that thing. Wow. Is that a trend? It is for the guy on the 4-hour chart. That's a daily. So, anyways, that's my rant. I'm sticking to it.